Smart money is quietly piling into 10 ASX stocks right now. So tonight we're pulling back the curtain. We'll show you exactly where they are buying and, more importantly, what the price action says about what comes next. Plus, is it time to go all in on the ASX Energy stocks? The setup is forming and we'll break down the key catalysts you need to know. Also, one ASX company just dropped major news that could completely rewrite its future. The question is, will the market catch on before it's too late? Now, if you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian stock market show. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. I'm Philip Tortevsky, and joining me is Wealth Within's professional trader, Janine Cox. Good evening, Janine.
Good evening. Great to be here.
Great to have you on. It's just the two of us for now, but we do have Dale and also Pedro joining us remote. So let's go straight to Dale and welcome him also onto the show. Dale, good evening, mate. Welcome aboard.
Yeah, sorry I can't be there today, but I'm sure you and Janine can handle it pretty well with the market going very, very nicely at the moment. So I'm excited about tonight's show.
Yes, it is a very, very exciting show tonight, so stay tuned. But anyway, let's get straight into it. This concept of smart money. Now, Janine, I want to start with you here before we get Dale's thoughts. Obviously, it's spoken about in so many circles: smart money, institutional, insider buying or company directors. What is it from your perspective, and how important is it to the retail trader?
Look, I think it's actually old news. I don't think it's really as relevant now. I think that institutions do have some sort of an edge in that they can see what's happening with money flows, but an individual can just have just as much of an edge by looking at a price chart if they've got the knowledge. There's always been this thought about, you know, if a director buys shares or they sell shares, maybe we've got some advantage by following what they do. But I think history has proven that that's really untrue, because we often see when directors buy or sell that the share price does the opposite. Directors might buy at a low when they're trying to actually show the market that they've got confidence in their stock, and that sometimes can cause a little bit of a short rally in the share price, but it could cause the shares to go the other way. You know. So it's really the chart that's telling people what it is. But the main thing I think people have to think about really is that forget this idea of that the people out there, the big institutions are the smart money. You can be too if you have the right knowledge. Really, that's the message. Yes,
all right. Now, Dale, I want to get your thoughts on this also, because, I mean, you know, obviously, as Janine said, it's not a guarantee that when smart money does buy into a stock, whether it be a director or institutional, that the share price is equated to rise that moment. But, I mean, is there some correlation when you're dealing with smart money pouring into the market, giving you insight into the likely future? Because, I mean, if you're thinking from a director's perspective, why buy the stock if you don't think the company's going to perform, right?
Well, you'd think that, and there's a lot of things that seem logical on the surface that actually, when you look into it, we're overthinking the whole process. And when you're talking about smart money, they're no more smarter than the average retail investor quite often, because they have their, I suppose, for want of a better way of saying it, they've got their hands tied about a process or a mandate that they have. For example, you know, if you have a top 100 mandate for a managed fund, then that's all the stocks that you can invest in. And if you're more of a buy and hold fund, then that's what you can do. You don't need to be Einstein to do that. Anybody can figure out how to do that quite simply, or copy the index like in ETFs. I mean, people know my thoughts on index tracking ETFs. You can do better yourself by just buying and holding the top 10 to 20 stocks on the Australian market, and you'll do better return and you'll have lower risk. So is it really smart money? Do I look at what directors' interests are doing? You'd think, well, if their directors are buying, it would augur well for the share price, but they may have another reason for buying and or selling that we don't know about. But one of the things I wanted to talk a little bit about is I saw an email the other day from somebody who was talking about this so-called smart money, and then they'd been trying to trade for a number of years and they were hit and miss. And this person that was looking at undertaking one of our courses saying, you know, the average person on the street can't beat the smart money. They can't trade against the smart money. And it was like a defeatist type of email, and it's nothing further from the truth. And as you and Janine know, when we're mentoring traders and teaching them how to trade, the individual has much, much better chances of outperforming the market than any of the big end of town, or this so-called smart money. And you don't need to worry about them, what they're doing. What you need to worry about is understanding what the charts are doing, looking at the stock itself, and having a set of rules around that. You'll profit a lot more than what you wouldn't if you were following that so-called smart money. But you'll do it a lot easier, and it doesn't take much. You don't need to be Einstein to do that.
Yeah, and I mean, look, the combination I think we can, I guess, move forward to, especially tonight, is having a look at how that smart money is positioned in the market. And then, as Janine and Dale said, take the control in your hands, go look at a chart and really make that final decision on whether it's smoke and mirrors or whether there's really something there to it, because the price action will tell you that. So let's now go and take a quick look at this site, because this is a free reference we would like to show you today about where you can find some of these director transactions to give you that, that quick glimpse, Janine, in terms of who is buying what stock. It's on the Market Index website. Very easy, simple, free website. You log on to Market Index and scroll through the website. I won't go through, all the steps to get there, but I'm sure you'll find it. And as you go down, you can clearly see that it'll show you a list of the companies over the last week that are purchasing shares on the market. There are a number of options, whether they be options being exercised. The ones that are most relevant are the on-market trades, because that's where directors are actually placing their hard-earned cash and buying stocks on the actual share market, which holds more relevance than some of the other options given or what have you. So let's...
And if they don't believe us, they could just check it out by taking that data and putting it on a chart and then seeing what happens to the share price.
Yep, and I'm glad you just said that, Janine, because that's exactly what we are going to do. Let's go and get to 10 ASX stocks that are being purchased quietly and find out whether there is real merit to opportunities in those 10 stocks. So start off, Janine.
All right, to kick it off, we've got this stock called True North Copper, TNC. It's a little one, might be nice for those who like a specky stock, but obviously I'm not throwing my hat in this ring. This one's trading at around 21.5 cents at the moment. $6 million traded at 20 cents, right? I'm just looking at the jump in the share price, if that's real, where it traded right up to this high and then pulled back again. Something's obviously in that. So the first thing to do is go and have a look at the news on the company and find out what's going on, if this is a stock that you're interested in, or maybe you just want to study it and see what happens afterward. But note how far it's actually pulled back as part of the overall look, it traded up significantly, but it's come back around 57%. Still well above where it started, but how many times do you see a stock doing that sort of thing?
Yeah, and now these purchases are all in the month of May, so over the last couple of weeks, where we see the the 6 million come in. But I mean, when you're talking about a stock like this trading at 20 cents, and I want to get your thoughts on that, a $6 million value purchase at around these lows in the last month, given it's had the huge run, now pulling back.
Yep.
From a technical perspective, take away the illiquidity side of this stock, if you will. Do you see some, I guess, merit in terms of why it would look attractive at these levels? Or again, is it, I guess, a bit of a, maybe a side agenda in terms of why it's being bought here, not purely because of what price is showing us?
Well, look, I just think that people will have a case of FOMO if they're looking at this and think, okay, and maybe in their minds, look, the price is going down. We tell people not to buy stocks when they're falling. Don't buy the story. I mean, it went up 1,700%. But my point for raising before about, how many times do you see this? You don't see this that often exactly in this scenario with that big a jump. Often it's going, stocks, the small end of town are going the other way. But the advantage that traders do have that can read a chart if they're wanting to trade these types of stocks is then to trade it after the bounce, after it's come back, settled down and find a nice set of rules, wait for good rules to get in, because often you'll see a consolidation after this occurs as it tries to find a bottom and the real price that the market's willing to pay. And once that equilibrium comes in and the stock settles down, you might see a bit of a bounce up and it pulls back again, and then we'll know the truth about what the stock's really worth.
Yeah, I mean, you talk about this all the time, and I'll get your thoughts on this one here, Dale, in terms of just buying a stock because of news or because of a dip or because of directors buying, but then overlaying what we teach, our clients, our students, and that is that confirmation that's going to give you that high risk reward setup more often or most times avoiding you getting into these, ifs and or but type situations. So I'd like to get your thoughts to speak a little bit on that in terms of why getting that confirmation is so important and how you've mentored through that for clients to get those solid trades, but also if you are seeing any of that coming into this chart right here, or is it again, interest, big purchase by a director with maybe an agenda over the next 5 or 10 years, nothing to do with what price action is doing today?
Yeah, look, when you're looking at a stock like this, you've got to keep things in context. And I find a lot of people, when they're looking at the stock market, don't put things in context with what's happening. And if you look at if you look at April, for example, the total volume in shares traded during April was about 6 million, which 6 million shares at 20 odd cents is about $1.2 million. So you're talking about $6 million went into this at 20 cents. So 4 times the volume that happened in April went into that buy of $6 million at 20 cents. And what happened to the share price? Not a lot. And so you got to put that in context, is why would you be looking at a stock like this, and how are you going to trade that stock? And why is the director or that smart money, as you talked about a little bit earlier, why are they buying that stock? And it could be they want to get a position, or they want to take over, or they could be thinking that, hey, this stock, there's a lot of stuff happening, so I want to get on early and get in low, and it's going to go in a nice bull run. But at the end, the chart doesn't lie. It really doesn't lie. And this stock, when you look at the chart, if we go onto the chart of that and you look at it, if I look at that weekly chart, and I'll bring it up big screen so you can have a good look at it, nothing much has happened over the last, and obviously this bar here is April, so pretty much nothing's happened, even though 4 times April's volume went into one trade. And to me, this is not a stock that people should really be looking at. And I think we tend to look at a lot of the wrong stocks. And I've been chatting with a lot of new people over the last week or so who've been inquiring about our courses, and I thought I'll get on the phone and ring a few to see what their thoughts are on the market. And it's amazing how many people are not putting things in context. They're looking at stocks that they shouldn't be looking at, and they're struggling with their trading. And this is one of those stocks that I think, unless you know what you're doing, following the smart money is not going to make you money.
Good point. All right, well, let's now get to the next one, Janine.
All right, the next one is Macquarie. This is one that a lot of people are going to be interested in, so stay tuned. Maybe you've got this in your portfolio, or maybe you're looking to buy after the dip. We can see 260,000 at $208.26. Well, it's a drop in the ocean.
Yeah, it's more who
anything, doesn't it?
Yeah, it's more the who rather than the number in this example. But I mean,
I think whoever was going to be buying down in this bottom at April 2025 has probably already cashed in now, especially after they hear the news about the 260K.
Yeah. I mean, what are you seeing in terms of the price chart there? Obviously, that's an important point. As you said, a lot of stocks during that recent correction that we had, and I'll call it a correction because we've had such a strong bounce, it came to that $180 level, which was, or 170, which was huge support back in 2023-24. Now we've bounced. We know Macquarie is one of those stocks that is a growth-driven stock throughout history. Can this break the all-time high next, and where to after that?
Look, the answer is yes, but there's always a but, isn't there? I mean, the way that the stock's unfolded has actually broken something historical that's really a bit of a concern. I mean, even though it's showing support at this level, the actual pattern that the stock was unfolding in, which was pretty nice, really, when you think of the big picture patterns. And I was only just yesterday chatting to 2 of our mentors who were looking at patterns on stocks, because they're the first module in the advanced course, they're doing all of that great stuff and they can see through these sorts of things. But the real risk is now that it doesn't break through that high because it's broken that pattern. So it leaves it as, it's not nice and clean anymore. Do you know what I mean? From a charting perspective, it's more a question mark for me as to where it's going. And there's a bit of controversy happening with Macquarie as well. As in the regulator was looking at them. And I won't go too much into that, but you can Google that side of it if you're interested in finding out more. But, I'd just say at the moment, I'm on the fence with it right now.
No man's land. All right, excellent. Now, did you want to add something on this stock, Dale, or are you happy to move on to the next one?
Mate, I'm happy to move on to the next one, but I do like Macquarie. It's just a volatile stock, so if you're good at you've got good solid rules around it, you can make some really good money out of it at the moment, and now's the opportunity because it did come off. But how about we go to the next stock?
I'm glad he said that because he's got BKI investments, so that means I don't need to talk about it.
Yes, well, let's get to the... Janine's just handballed one off to you, then BKI Investments is the next stock. So how about you give that one a nice bit of analysis?
Janine's always good at handballing things to me, the too hard basket and everything, and gets those pink boxing gloves out. So that's why I'm sitting so far away so she can't hit me anymore.
Yeah. Yeah. I'll bear the brunt tonight. Yeah. So BKI...
Yeah, at least you're further than arm's distance away, so you're okay.
Come on back in.
Let's go and have a look at... Well, let's get on to the charts, guy. Okay, let's get some sense and sensibility going. So this is BKI Investments, and as you can see there's $250,000 at $1.68. And interesting stock, BK Investments, but you can, when you look at it here, it's literally been going sideways, and since 2014. So we're talking, pretty much 11 years, because that's May 2014 where my pointer is. You really haven't been able to make any money out of it. I keep going back. You can see it hasn't been one of these stellar performers ever since it floated. And if I use my little tool, you can see even right back at the beginning in 2004, you can see it's only done 88% since 2004. Now, you would have collected maybe some dividends in that time. This is really a stock for traders, but interestingly, even though you had $250,000, $1.68 come into it, it really hasn't done too much. But this could be a nice little move up, but there's a lot of resistance right across. If I use the crosshairs, you'll see there's a lot of resistance around that $1.70, $1.80 sort of level through on this stock, but it hasn't proven it's starting to go up. But what I do like about it at the moment, if I use a trend line or Phil's momentum lines, whatever you want to call them, it is now got this beautiful little trend down here. And if I use, there's a lot of support through here around that $1.60, etc. If it starts to break through this, makes a higher high, I like it. I think it looks good, but don't expect it to shoot the lights out. That's really what I'm suggesting here, because it doesn't run very hard when it does run. It's an investment company, so I'm assuming it's some sort of, I'm not sure what it's investing in. I haven't looked at the company specifically and what its fundamentals are doing, but it's, you would assume if the market's a bit more bullish, it'll go up. But right now, it doesn't excite me too much as a stock that's going to go too far. But here on that monthly chart, it is looking good. But let's have a quick look at the weekly chart and have a look at it just to see where we're looking at here. And you can see here, this is not as liquid as a lot of other stocks, as you can tell just by looking at the bars. And this is one of the things we do teach traders all the time. It's called short-term bar analysis. We teach it in our beginners course, our trading mentor course, which is cheap as chips. It's under $2,000, and I answer all the emails in that. But we also teach it in our major courses like our diploma of share trading. But this just shows me how illiquid this stock is, even though it does move up and down nicely. At this point in time, it's a lower liquid type of stock. And if we look at last week, you can see here that it traded 3 million shares at $1.62. So you only have to multiply $1.62 by 3 million odd shares, and you can realize there's not a lot of money going into this stock at the moment. So again, it'd be a little bit more for traders, a little bit more for short-term moves. I'm not super excited about it, and it doesn't look like that smart money moving into it has really affected its share price at all. And I don't know what you want to... it's probably a stock that Janine probably would be interested in either, but I'm prepared to go into the boxing round with you, Janine, on this one.
Boxing gloves are off, mate.
Yeah,
Right.
let's keep it peace. Let's keep the
Well,
peace.
this is bare knuckle fighting now, is it?
Look, let's keep the peace on tonight's show. And on that point, boxing aside, I do want to bring up your book here, Dale, How to Beat the Managed Funds by 20%, because just like you have shown in that example, the trend line, great tools, great introductory, book to pick up to learn the things that we do on this show. There's a lot of wonderful information in terms of portfolio construction, and as I mentioned, the trend lines. But if you do want to get serious with your trading and take it to the next level, please go and visit our website, because we do have share trading courses out there that really dive into moving you to that path of becoming that professional investor or trader. But anyway, let's now get to that next stock, Janine, which I hope you like this one.
Beacon Minerals.
All right.
Look, what can I say?
You love it. Look, I can tell by your smile.
Do I?
Yes.
All right. Phil's told me I've got to love this one. 235,000 at 2.8 cents, right? So this one, to me, that is significant when you've got a big parcel like that on a small stock with very small, trading at 2.8 cents. Looking at it, it hasn't really seemed to move the share price much, which is interesting. So that's my first query. So maybe it was definitely an on-market trade?
Yes, these are all on market, yes.
Whoever did this was very skilled, obviously, in getting that trade on, which was nice. But it's still a sideways consolidation. Now, I've got to be fair to these stocks, okay? Even though I wouldn't trade this stock, I've got to be fair to the people who do like this. What I do like is this. You know how many times these sort of setups result in huge profits? Look at these. Now, we teach this as well, how to trade these breakouts properly. I'm just looking at the run up here, 122%. Remember, it's not just about where you buy. They talk about with property, it's always, where you buy the cheapest house in the most expensive street.
Yeah.
Here, you're actually not too concerned about that. You just want to buy when most of the mugs have already played around with it enough, which we're seeing in this sideways move here of accumulation and then the breakout. But the key really is how in the world do you get out of it? And that's one of the reasons why I don't trade these shares. But I was having a conversation with one of the mentors yesterday about it, and he was trading a stock and he found that just by trading with a certain strategy on the monthly chart, he was actually able to get out a lot better.
Yeah.
So he admitted that as part of this mentoring, we walk through all of the ins and outs of how you're going. And it's really good for the psychology. And sometimes traders, when they're learning, they will do things outside the box, and that's okay. He might not follow a rule exactly, but then he realises, hey, I should have sold. Now I can see another rule, I've got to get out. Rather than what people do when they don't have the knowledge and experience is they will just continue to hold until they're right, and they might never be right with stocks, especially like these ones. So, if you have an issue with your ego, then maybe that's why you're having trouble trading. That's part of the reason, isn't it? All right, so we're looking at the pullback here and we're seeing this happening. A nice little exit may have been under this low here, but, as far as directors buying and what it could be creating, it could create another one of those opportunities with this sideways move. So I'd just wait.
Just wait and watch. All right, great advice. Now, next one.
Okay, next one is Endeavour Group. Endeavour Group's actually been on a long decline. We're seeing this down here for a couple of years, which is actually often quite interesting. Stocks can always go lower. Don't ever think that they will. This director's purchased 200K right near a bottom. Often directors will try and do this. $4.12. Now, I would say that if anywhere he was going to buy it, it's still a higher risk proposition given that it's going down. But the better time to buy is once it actually breaks out through that trend line.
Yeah.
That's a clear sign here. In fact, I'd probably wait until it got through that peak there. It's nice. And we talk about why that's important when we're doing the course, the support and resistance, but there are also groupings of different analysis that tell us what's important. And we would have to check that to refer whether it was exactly at 450 that you had to watch for. But that's what you learn when you're learning to trade. But it's too early, basically, at this point.
All right, Dale, if we can get your thoughts on this one, obviously a little early for Janine. Are you in agreement in terms of looking at EDV?
Yeah, look, it's way too early for this stock. It is going down, but I want to add something with people looking at directors buying into shares. You've got to remember ASIC has really clear rules around directors buying stocks in companies that the directors are of. Obviously, that comes under the Corporations Act, et cetera, and ASIC is watching for things like insider trading. Obviously, as a director, you're in the board meetings, you know what that company is doing because you're part of that company. So you're seeing any deals that may be coming up, any mergers, acquisitions they could be doing. You're actually seeing where future profits are going to lie, all sorts of different confidential information. But if you were a director and you bought today and then the company announced something tomorrow that had a real positive effect on their share price, then ASIC is going to come knocking on your door. So when they do buy shares, they could be knowing something's coming up in advance in a month or 2 or 3 or 4 months. And so they're buying those shares now, but they've got to be very, very careful about what they do when they are buying and selling shares. They've got to be really transparent on it. But again, don't try and second guess what they're trying to do. But right now, Endeavour Group, I'm not excited about it. I'm really not excited about it. I don't think it's a company that is worth my time at the moment. But as Janine said, it's underneath the trend line. When it breaks through that, it starts showing support and starts to move up again, it could be a really good buy once you do that. That could be a few weeks away. It could be a few months away. But right now, it's not getting my interest.
All right, well, hopefully the next one does, and we'll get your thoughts on it. I believe it's GEM.
Yeah, it is actually. I'm excited about one that's coming up shortly. It dropped over 6% yesterday, and it's looking really good at the moment. So it could be a good opportunity. So if you're looking for a great trade, hang on. We're going to get to that in a second. But right now, let's go and have a look at the chart of this next stock. It's called it's G8 Education, which is the stock ticker code GEM. I've been following this for quite a while, way back, and it did beautifully, as you can see there, from sort of 2011 all the way up to that big high that it had in September 2014. But since then, it's really not done too much. Obviously it's in the education space, but look at this real consolidation right through here. And you got to think that often when you see sort of that consolidation that's slowly rising up in a bearish market, it will signal that stock's got to fall away, but this is not wanting to do that. It's holding up really, really well, but it's not trending that well, but it's got this nice little sawtooth pattern so far. But since we've had that low in December 2023, it's moved up quite nicely. So at the moment, still looking a bit weak, and we're halfway through the month. And if I just expand that up, you'll see it opened there this month at $1.25, hit a high of $1.33, so it rose really, really strongly right up to that high, and then it's currently at the moment halfway through the month, or just over halfway through the month. It's currently closing it at $1.26, so it's not giving us a lot of signals that it's strong, but from the open in the month to that high, there's 6.6%. So it can move if it wants to move it, if it wants to move, but at the moment it's not really giving us a strong signal that it is about to move up. But let's go and have a quick look at that weekly chart. And again, we've got that consolidation sort of pattern coming down that we saw on some of the other stocks. It's a little bit more lumpy, to use a highly technical term. We're not seeing a symmetrical type of fall away. And if we use our trend line tool, you can see off that high there in September 2024, it's got that beautiful little pattern coming down to that low there back in April when the rest of the market was falling away. Since then, it really hasn't shown a lot of strength. You can see the opens and closes all around that sort of $1.20, $1.30 mark. It finally broke up there a couple of weeks ago, and then an immediate took off 2 weeks ago, or last week, moved up and then immediately reversed. So currently this week it's down a little bit. Nothing exciting, but the volume's dropped off through here while it's rising, and so it's not really a positive sign. I'd be wanting to see it move up through here in a nice little move. And again, it's like the other stock we talked about a few minutes ago. It's going to be weeks, possibly even months, for it to move up. What I would expect, I wouldn't get excited till it broke above that peak, broke above this trend line, then came back and found some support. But at the moment, just stay out of it at the moment. But it is a nice stock. It's just not trending that well.
Yeah, fantastic. All right, next one, Janine.
All right. Now, this one is ASX Energy. Sounds interesting, doesn't it? Not so sure about the chart, though, but the one thing that it has in its favour right now is this big long-term bottoming pattern. Okay, so it's come all the way back to check that bottom. What I don't like is this huge sell-off. I'd want to know why, especially for a small stock like this. I generally don't get too involved in what's happening with the bigger stocks, but when it's these smaller stocks, you're talking 3 cents or 2.9 cents at 100K was this purchase by this director. But to me, this has got a long way before we could even consider it. Just even looking at the weekly chart, it's just quite illiquid. It's very hard to get a strategy on. I'd even give it a miss for some time, just let it unfold.
Yeah, interesting. All right, Dale, next stock.
Well, you give me all the good ones, don't you?
No, I hope so. I haven't seen them.
Or did Janine pick all of those, did she? This one's Kalamazoo Resources that I'm going to talk about now. And there's all of these stocks we've been looking at outside of Macquarie pretty much, they're all doing the same sort of thing. They've been very bearish. even though directors are buying into it. So hopefully we're getting the theme, or people are seeing that theme. This one, $100,000 at 9.1 cents they've bought this stock on, and it really hardly moved it. I mean, the exciting thing about this is it's got a big time low back in August 2017 at 7 cents. And more recently, in July last year, it hit 6 cents, stayed above that. There was 6 cents in there, moved up, came back, and now more recently in February, it hit it down at 7 cents. So there's a nice bottoming pattern happening here, but it doesn't necessarily mean that I get super excited about it. I mean, yes, it looks like it's a big double bottom, but it's not necessarily mean it's going to go ballistic and go shoot the lights out. And I know a lot of people will follow stocks like this, looking for things to say, yes, this thing's only got to, go up a couple of cents, and I've made a lot of money, because as you can see there, it's really just trading around that 7-8 cents at the moment. But you could be buying in a stock that just keeps going sideways for ages, and that's the challenge with these stocks is they need something to really push them to go to great heights. And obviously this one did have a big all-time high there. If I leave my pointer there at $1. So we'd love to think, okay, it's going from 9 or 10 cents to $1. That means you're 10x or 10 times your return on that stock. But what are the chances of that at the moment? I don't think they're fairly high at the moment, and especially when you're seeing a director coming into the stock and nothing much really moving in terms of price and not necessarily being really super bullish. But you can see here, you could have owned this stock all the way back in October 2023, and you've not made any money at all on there. And whilst it does some nice little runs with nice ranges there in terms of nice percentages, from here to here, you can see it made 57%. If I stretch that up or around about that over 1-2 weeks. So it does move really, really fast when it does move. I'll show you the next one so give you a bit of an idea. From that low to there, you can see nearly 30% in 1, 2, 3, 4 weeks. But as Janine said, you've got to be able to get in and get out of it. And how do you capture this return? Often we see traders, they see something like this happen. They see volume starting to rise up, which you can see through here. And then you get the people coming too late. Most people get FOMO. They see it's gone up 20%, 30%. Then they jump into it and all of a sudden it starts to reverse again. So anybody that bought in here on this in November 2024, if let's say they bought in here, then they're suffering another 27% drop if they keep holding on, because that's what we find a lot of people do, as Janine mentioned, is a lot of people won't take their losses. They have a great fear of losing and they have a fear of being wrong. And both of those fears don't help you as traders. And this is one thing we work a lot with our students, is helping them understand rules and strategies that will keep them safe and not get them stuck in the stocks like this. If we look really close up, we're talking about since earlier this year, March, it has moved up quite nicely, as you can see, and I'll give you that range there again. So from that low to that high, you can see another 41%. Again, volume rising up into that high, and we'll like to see probably what's going to happen is we'll get a downward move for 1, 2, 3 weeks, maybe a little bit longer. But if that downward move is on lower volume, then it could be good. If volume stays high, then that's not auguring well for a great stock. But again, this is a trader's stock. This is not one you would buy and hold. You need to have really, really sensitive rules to get in and really sensitive rules to get out. Otherwise, how do you capture this sort of profits? It runs really hard. You've got to get in really early when the market is thinking this stock's going down. You've got to be getting into it. And then that's taking high risk to hopefully it just makes those big jumps, because each one of those bars, it does not look like it's strong. But you've also got to do the opposite on the other side, is where do I get out? How do I get out? And how do I have consistent rules for getting in and out? And that's a lot of work in my book, where there's so many stocks that are much, much easier to trade that will get you more money. And a lot of people, as I was saying earlier, are focusing on the wrong stocks. And a lot of times when they're focusing on stocks like this, they're looking to shoot the lights out. And what they end up is shooting themselves in the foot and having stocks that are just going nowhere or going sideways. So, but I will hand it back to Janine because she's laughing now.
If you were here, I was going to give you a kick under the desk.
she was. You've almost cracked her up. Yeah, she's been waiting patiently for her turn.
Not patiently.
More than patiently. Let's give Janine her thoughts on this stock because she does want to say something. and put your analysis on you, Jenny. What did you want to say on this stock?
Okay, I agree with what Dale's saying, so I can't quite get the boxing gloves out yet, but
Surprise, surprise.
just have a look at that chart. One thing I disagree with, though, is you've got looking at these, the way that it's unfolded, you look at the angle, the rise is shorter than the fall, rise is shorter than the fall. Now I'd expect the rise to be longer than the fall. That's the first sign of this turnaround. That's what we've got to wait for. If we get that move and it comes up to challenge that and the rise is actually longer than the fall and then it takes off, then I think the director's got something.
That's an important point. And just on that as well with the directors, I mean, as Dale rightfully mentioned, expecting the share price to move instantly would not be great for that director if that were to happen. So often when you do see this, the share price is a following 4, 5, 6 months, a year. So don't totally disregard, as Janine showed, what we're seeing, because the move might be coming, not just today.
Exactly.
All right, next stock.
Next stock is Dyno Nobel, which is an interesting one. Check this one out. Now, it actually has really good opportunities in terms of the trend. So we've got here some big rises. So out of COVID, it did extremely well, 167%. When it moves up, it's short and sharp. You've got to be quick, you've got to be ready, and you've got to see those patterns forming. 64% increase on this one. And then off the bottom of this one, we've got about 60%. So looking at the next one, if we were to project that off this recent low, I'd expect it to go 50. There's that resistance, 50%. Yeah. It could easily challenge that high. And if it gets up around there, could be quite nice. Now, where the directors bought is not long off this bottom, first move up. So, when a share price is falling, there's no question really about whether, they're buying with anything that's being sold off, isn't it?
Yeah.
But, I'd be looking to get some more certainty out of it if you are interested in trading this stock. I think I'd want to see it hit the angle of that line a little bit and then to bounce out of it. But there's a potential in there for some opportunity if people like this sort of volatility and short-term trading.
Yeah, and we're talking about a stock that I believe is in the top 200. So one of the bigger cap stocks. All right, Dale, I know this one was the one that you were referring to in terms of opportunity, and what we will be doing after this is getting into a very exciting sector, which is that energy sector. So if you're talking about opportunity, there are some major opportunities coming, so stay tuned for that. But let's get your thoughts on this last stock, Zip, the market darling over COVID. Had a bit of a pullback recently.
Yeah, it was in the news. I mean, it fell yesterday. I think it was like 6% yesterday. And it obviously confuses people when you see a stock in the media and you see them fall by 5, 6, 7, 10%. And people often go, well, why is it falling? And the answer is, who cares why it's falling? The answer is, if you're a trader, you should understand where stocks will find support and resistance, where they're going to turn, and you have strategies around it. I don't really care why it's falling. I just need to understand what that means on a chart and analysing the data that I'm actually seeing to go, okay, if I'm in that stock, what do I do? Am I holding or am I exiting? If I'm not in that stock, what am I doing? Am I looking to buy once it forms that low and has that dip, as we talk about, buying a bottom after it's had it, and once it's confirmed that it's stopped falling, getting into that. So to me, it's an exciting thing when a stock's doing that when I'm not in it. And if I am in it, as I said, I'm just looking for whether I hold or whether I sell. But let's go and have a look at the chart to show everybody Z1P or Zip. As you can see there, 98,000 shares at $2.10. 98,000 shares at $2.10 is 2/5 of nothing for this sort of stock, because if you look there, there's 471 million shares of volume traded last month at an average of $1.80. And if we look on the week last week, if I go onto the weekly chart, you see 139, nearly 140 million shares at around $2. So there's a lot of money going through this stock. So buying $98,000 at $2.10 is not really anything that I'd get too excited about from a director's point of view. What I love about this stock at the moment is have a look at this beautiful move up on the monthly chart. It is looking sensational. It fell out of bed. As Phil said, rightly said, it went ballistic during COVID and right up to that February 2021 high, $14.50. And if we use our little tool, you can see here the March COVID low to that high 1,283%. Now, a lot of retail traders, as it was coming down, I remember getting a lot of calls from retail traders and emails from people watching our show going, dollar cost averaging Zip, what do you think it's going to do? I bought it at this price, I bought it at this price. And the more they called in, the more it kept falling away. Eventually, it hit that low there back in September, October 2023. But even that's showing some signs. If we put the crosshair on, you can see there's some support around that level, around that 28 odd cent mark. And since then, it's looking beautiful, a beautiful trend up. But see, it's a little bit not as steep as what it has done. And this is more sustainable in my book, and it's retraced downwards from here. So here we had that high there at $3.56. If we use our little tool again, you can see here that low there was nearly 70% fall. So whilst it doesn't look by a lot, this is not uncommon when you see a stock move up beautifully here. We've only had, there's not even one red bar in that run from October 2023 right through to December 2024. So 14 months, not one red bar. We had an outside bar through here. So then we've had 1, 2, 3, 4 months down. I think this is looking really good. I'd like to see it go up a little bit more and come back. Give me a higher low than this, but right now I think this stock is setting itself up for a really nice run. If we go to the weekly chart, it's still a little bit early. And if I expand that out, you can see there's the low there from last month at $1.08. So this is opportunity waiting for you. Now, I know people will have FOMO and be wanting to get in it. Some people may have already got into it. They would have been watching that. And you can see here, 93%. And you can see volumes rising all the way through here. So the volume's rising from sort of this bar all the way through here. Big volume on the end of the run, which is normal. The first couple of weeks out, volume had dropped away, and then the bigger volume started coming through here. This is telling me the retail traders are jumping in here. Now, they're going to be disappointed, I would believe, over the next few weeks, as I think we're going to see 1 to 4 down weeks through here, possibly coming down anywhere between 30 to 50%. So anywhere between sort of that sort of level right down to about that sort of level down in here. If it retraced everything down to that low, that's about 50%. So, but it'll probably find some support somewhere around about that 30% level over the next couple of weeks. If it does less than that, that's a really, really good sign, but not one to jump really early in, because you're going to get plenty of time to get into this stock and to really set yourself up for a nice long bullish move up as it does that. But we need to make sure we're trading on confirmation, not on speculation. And at the moment, it's risen strongly, but we need to see where the sellers are and how voracious those sellers are before we jump into it. So anybody that's jumped in over the last couple of weeks is probably going to be disappointed for the next few weeks, possibly a month, as it falls away. But that gives you plenty of time to do all your analysis and then get into the stock. So, and now Janine's going to agree with me on all of that, aren't you, Janine?
Absolutely, and I think it looks hot, just like you.
Well,
it looks great. It's the one stock that I actually think looks good. You get a trend line on there eventually, and that little pullback that Dale's talking about, I think he's spot on.
That was my next question. Out of all of the stocks we've seen today, really quickly, Janine, your favourite?
Favourite would be that one.
That one. Dale?
Yeah, this one and Macquarie.
This one and Macquarie. All right.
This one over Macquarie, but I do like Macquarie, but I think this one's the better one, but not right now.
Yeah, and I think more than anything, what I love about this Zip, it gives you, I guess, to all the crypto, warriors out there, it shows that, hey, the stock market ain't too bad. In 1 or 2 months, you can still get 1,200% returns, and this isn't just a one-off scenario. There are so many stocks out there. So if you are thinking about the stock market as a growth vehicle, you'd be surprised how much opportunity there is. This is just one example. Anyway, now before we move on, I just wanted to say thank you very much for joining us today, Dale.
No, my pleasure. It's been safe being several kilometres away from Janine and her boxing gloves, so I enjoyed it.
Yeah, great. Thank you very much, and I'm sure we'll see you on the next one or very soon. But now, if you do want the skills to analyse stocks just like you have seen tonight, visit our website, wealthwithin.com.au. All right, now moving on, shortly we're going to get into an amazing opportunity in the energy space. So that is one to really get stuck into in a moment. But first, now let's get to our hot stock tip for the week, which we are going to be welcoming Pedro Banal as our analyst at Wealth Within here. Obviously, he's remote also. Everyone's on holiday, it seems, these days, Janine, apart from you and I. But Pedro, welcome, mate. And what's your hot stock tip for us?
G'day, guys. Now, today I've got a bit of an undervalued gem for everyone, and that is Worley Ltd, ticker code WOR. So let's get straight into the chart because there's a bit to unpack here. So if for people that don't know it, it's a professional services company for the energy sector, and it's part of the top 100, which is great. You know, today they've come out with an Investor Day presentation where they have reaffirmed the FY25 outlook for low double-digit earnings. So even though it's at the lower part of the double digits, it's still positive, which is great. Now, these are the key points that I've taken from that. Number two is that the year-to-date wins as of March 2025 are 9.4 billion, up from 9 billion the same time in 2024. So that's basically the contracts. This company is making $9.4 billion contracts. I mean, that's huge. Another point that I like is that they're investing in AI and processes internally. And number four, they're reducing debt. So that's always welcome. Now, that's a fundamental side. I think that that's great as it is, but the technicals is telling a beautiful story as well. So let's start on the monthly chart here. And I've highlighted these key levels of support, which is $11, and key levels of resistance, which is $18. Now, this is a long-term resistance level, which it has struggled to get past in the past. Now, we've recently found support at that $11 level, which is great. And as you can see, I've marked these momentum lines where usually when the stock breaks above these momentum lines, we do see a sustained uptrend, eventually hitting a bit of a topping at around that resistance level. And we could be seeing something of that similar manner unfolding. It could still yet have a little bit to unfold before we break above that momentum. But if we have a look at the weekly chart, there might be some small to medium term opportunities as well. So let's get on to that. Now, expanding out the weekly chart here, you can see that I've marked some short to medium terms level here. I've still got that $11 level, but more short term, we've got that $13.20 level, which it's hit its head on just recently. So it's going to struggle to get above that level, I think, and we might see a bit of a pullback, possibly to fill this gap that we see here at around that $12.50. But if it does manage to break above it, then we could see a sustained rise up to that $15 level, which represents at around 18% upside. And if it does break above that $15, well, then we've got another 13% upside. Now, if it does fall away, I would say that the worst case scenario is a 15% downside down to that $11. But for the moment, it's holding up great. The fundamentals are aligned, and you can get it all for the low price of $12.90 at the moment. So that looks pretty good to me.
Yeah, very interesting stuff. All right, I just wanted to get your thoughts on that recent drop, though. Obviously, there might have been some news come out with Worley's over the past couple of months. Any idea on why it came out of bed, gapped out that much?
Yeah, so that was basically the Trump tariff factor, as we saw in a lot of stocks. There's a bit of uncertainty because these guys, they provide services for the energy sector, mainly oil, gas, and things like that. So there was uncertainty around those markets. We saw the oil price fall heavily. So there was a bit of a concern that might affect them as well. But being a service provider, I mean, Trump doesn't have any tariffs on services, which is great. It's just goods. So these guys moving forward, I think that the market is realizing that, hey, it may not be such a bad story for Worley after all. Yeah,
fantastic stuff. Thank you very much, Pedro. We'll leave it at that for now. And that is it for our weekly hot stock tip. Now it is time to talk all things market trending this week. Janine, I know you've got something very special in a sector which Pedro will probably have liked to be here for.
Exactly. He's missing out, isn't he? But hopefully he's listening in. The question is, should you bother investing in energy stocks? Goldman Sachs analysts have maintained their oil price forecast for this year at $60 a barrel of Brent crude and $56 per barrel of West Texas Intermediate. There are a lot of factors that could create a further tipping point for oil prices. In 2026, Brent and WTI prices are forecast to fall to 56 US and 52 US respectively. A big reason for the bearish outlook is the nuclear deal between the US and Iran that recently became a more distinct possibility. President Trump indicated he's getting closer to a deal with Iran. Lifting economic sanctions could see the release of millions of barrels of oil per day into the market. All it takes is for OPEC to increase production and oil prices could continue south towards $40 a barrel. Now, downward pressure on prices puts pressure on the prices of energy stocks.
Yeah, this is a very interesting development because when you look at the energy sector and you look at the prices, I mean, they're probably one of the worst performing sectors of the lot on the ASX, bar materials, maybe thereabouts. But, you know, we're coming into a situation where, like you said, oil prices further falling. Some energy players are showing life, though, which is quite interesting. And so I know we're going to look at a few energy stocks and probably the oil price itself, maybe to get a bit more of an understanding on where things are. So how about we do that?
Yeah, look, we're going to be talking about a big oil stock, but also, and gas, and also later on in the show, we've also got Karoon as well, which is an interesting one. So stay tuned. Someone wrote in about that, which I'm looking forward to. But on the oil front, if we just have a look at the chart there, we can see there are some really pivotal levels for oil. Now, I'm not going to get tongue-tied again on light sweet or Brent crude or West Texas Intermediate. But you can see here that the oil price has actually taken out a really significant level at around $70 recently with that drop through that Pedro mentioned before. Now, I did actually consult Pedro, Phil, before I came on the air. And I'm not cheating, but he is a wealth of knowledge and I really enjoyed the chat. Pedro thinks that the price of oil is more likely to be $48 to $64 or somewhere in that zone going forward. It could hover between that range. And also he reflected on the fact that when Trump was in last time, he actually wanted oil prices low and they were around the $50 mark. So, you know, I'm not surprised really with all of this happening, but obviously there are global factors at play here in supply and demand that we've got to think about. But looking at the oil price, I'm really reflecting on these levels here. I actually think that we could see oil trending between $30 and $50 moving forward, you know, in coming months or at least into late 2025 and possibly into 2026. But with resurgent, when we see these spikes happening, when there are some tussles going on between the different powers, it could spike up again to around 70.
Yeah, I think that's a safe call there, Janine. Now, how about we get into the potential opportunity in Santos? Because, I mean, this stock here, big ASX player, at some point, obviously a little unloved at the moment, but forming one of those patterns we have seen on our market on a lot of stocks, the longer they go sideways and compress, if they're not really showing signs of breakdown, strong breakdown, at some point there's going to be a real bullish move coming out of this one. Yeah. Potentially, but not just yet.
Santos is actually considered a growth stock. So in this space, we've got Woodside and we've got Santos. Often there's this bit of an argument about whether Santos and Woodside's better, but they're different now, right? We've got Woodside that's paying huge dividends, more for an income play. Santos is considered more the growth stock. It's got huge opportunities coming up. We're about to see more gas come online in the second half of 2025, which is exciting. So I think there could be some opportunities to see growth in the Santos share price. It's going to be around speculation. So, you know, people have to have their technical analysis on the money to get in at the right time is really the message.
So just quickly on this one, when you're talking technical analysis, what level are you looking at to give you that confidence to say, hey, you know what? If it gets above here, then it's a real possibility that we're going to go on with it.
Yeah, I think we're best to go to the weekly chart because we're talking short-term trading, short to medium-term trading in these right now. But really, it's got to get through the angle of this trend first to satisfy me that it is going up. So that's really the yardstick, Phil.
Fantastic. All right, about that $7 mark. Great analysis there by Janine. Now, moving on, let's now jump into more stocks and answer your questions. Jack writes, a few weeks ago, you guys covered and liked LYC. I bought it and since then it's dropped 15%. I was telling myself, sell at 10%, but had this feeling it would rebound. Now, where do you guys see this stock going as I see it's on a decent downtrend? I also feel if I hold onto it rather than just give up and take a loss, it will eventually spike again. All right, Janine, now there are a few, I guess, parts to this email that are, stand out to me. One is there are a few questions in terms of, I just want to hold it because I've got the FOMO. If I sell it, it's going to bounce again, assumption. And buying it based on it looking good, you know, there's question marks there too. So please address all of those. What would you say for someone raising these questions and participating, buying and selling?
Well, first of all, I want to say thank you for writing in and being so honest about it. I think that's fantastic for you to be able to declare that, because trading is about psychology, obviously, as well as the skill side of it, which, you know, if you're second guessing yourself, it's really because you're not trusting yourself or your rules at this point, and you're trying to rely on your gut, which really, if you're really experienced and you've been in the market a long time and you've had the training and got the knowledge, your gut is going to play into the decision making. But when you're inexperienced in the market, which this Jack probably is, and I don't want to talk too much into that, Jack, but if you are inexperienced, then it's really, you've got to rely on solid rules. You know, if the exit triggers, you've got to take it, because you need to be able to hold on to that money. It's more important about, you know, what you don't lose rather than what you make. And I think here it's a bit of an ego thing as well, because, you know, where you're second guessing yourself like that, it's not trusting yourself. So that's my real message to you, is get some really solid education and make sure that you're reviewing your rules. We totally support people. I was talking to a student the other day about this and about having a proper checklist of analysis. You have a flight plan, you know what you're going to do, you know at all times how you're going to get out of a stock, and that's really important.
Yeah, I mean, like you said, having that plan at least gives you the possibility of having success on a trade. Without that, you're shooting blind. And
well, because you've got to be thinking that someone out there is going to take your money if you don't have that.
And I would also add, I mean, aside from chalking this one up under the, I guess, learning experience, obviously, as we mentioned, visit our website. There are a plethora of information and education that you can get out there. One technical aspect I can give you is have a look at the way you're placing that percentage in terms of stop loss. You're looking at a stock like Linus that moves 20 to 30% maybe, at the best of times in swings on the weekly, and you're putting a stop loss in of 10%. And so knowing how a stock moves rather than just putting a blanket stop loss in would be the more important aspect of the trading for me. And obviously, as Janine said, using the chart, using what is on that chart to show you where buyers are strong and buyers are not willing to.
But also accepting that with this stock, it is highly volatile.
Oh, yeah.
So it's just getting some experience, and don't take it too hard when you do get a loss, because it's part of trading. Yeah,
absolutely. All right. Well, we do have another Jack now who writes in, I am looking at Stockland for a short-term trade. It seems to be lingering around what I believe is a historical support resistance level of $5.72. I only just started backtesting it, but it seems like every time there's a buy signal, it gives me a signal to exit a short time after. What do you guys think of the stock for a buy after it rises up through $5.72? Now, again, Janine, another interesting question, but to me, if I read between the lines here, what I'm hearing is, again, a lack of putting things together, because what might be happening, and we see this a lot of times with people that come to see us, is it's one thing knowing buying and selling rules, but if you're buying and selling at a level on a chart which is screaming at you to say, hey, guess what, there's resistance right here, yes, it's going to reverse. And it's putting it all together to then really understand, got a frog in my throat, what is the best risk-reward setup at the time? And that's what it all comes down to at the end. But I mean, is he on the mark in terms of if it gets through 572, there is an opportunity for Stockland?
Look, I'm just questioning why, if you wanted to get into it, why you're not thinking to get into it today, because I mean, it's gone through at a really important level, if that satisfied you, or is the strategy to wait for the breakout and then the pullback, which you often talk about?
Yeah, I think that's what he was alluding to.
And if that's what he's talking about, then, okay, we're waiting for that pullback to unfold, and let's just have a look and see what that would look like. So if it comes back down to this zone here and pulls back, where's it going to come? You have to have already thought about how it might unfold, and there could be a couple of scenarios before it then takes off. But maybe it's about saying, well, okay, you're going to get in when it comes back above. I don't think that I'd necessarily wait for it to go above that high. Once it comes back, as long as it shows strong support, I would suggest that that's probably okay given where it's likely to be in the bigger picture.
Yeah, great advice. All right, well, we do have another email from Jules who says, I am looking to enter Karoon Energy if it closes above a monthly downtrend line this month and hoping to hold for a medium-term trade. I like where the energy market is heading and this stock appears more ready to trigger my rules than some of the other big players such as Woodside and Santos, especially as it has already retested the December low. I see the next resistance at around $1.95 and my stop loss would be at $1.43. All right, Janine, now with this one here, he's obviously got rules in place, stop loss.
Yep. He's doing all the right stuff.
Yep.
That's fantastic. Hopefully a documented trading plan, so you've not just thought about it and you've put it down on paper, which is wonderful if you have. Looking at the chart though, you're right, there is a trend down there. I can see that it's pushing towards it. If we're forgetting about the fundamentals, because that's something I'm going to come back to in a minute, technically it looks like a setup, but sometimes there can be these false rallies where the market pushes it up, it gives you an entry. So therefore you've got to be really clear on that stop loss, and you may even need to lift it up on a stock like this, wherever your stop is. Let's just see where it might be. If we're seeing that we go above here, we get see the stop loss is going to be fairly tight, even at 15%, but I wouldn't actually increase it on this one. Smaller stocks, we sometimes talk about giving them a bit of leeway. I wouldn't do it on this one because if it comes all the way back there again, chances are it could be continuing to fall away. But it's really your call as to how much you want to risk on it. Now, fundamentally, Phil, this stock, the forward forecasts don't look good. So, for a stock like this, maybe you could justify because it's a lower cap stock that sometimes these things catch up. But because it's in that energy space, and there's been this declining value in the share prices because of the oil price falling away and the whole sector has been sold off, basically. You could argue on one hand, this is where the biggest opportunities are, but this is where some of these smaller stocks could represent the highest risk. So that to me, it doesn't really justify picking something that's higher risk if the market was starting to hot up. Like, remember when we looked at lithium and it was starting to take off and you were looking at lots of these small lithium plays? They were looking really good. Then maybe you could justify it. But when the price of the underlying, and we're going to talk about that in the next part of the show after the break. When the underlying is going down and the stock has been going down, no, you need the underlying to turn around and go back up, or just the fundamentals to support the direction of this one, I think. I
think what you're saying, you're flying against the tide here. And when you're doing that, it's so much harder to trade any sustainable trends. In fact, they're all probably going to be more counter moves unless, as Janine said, the story changes for Karoon. So maybe better opportunities out there, maybe some of those other energy plays that we spoke about earlier. But remember to send your questions to info@wealthwithin.com.au and we will answer them in next week's show. Now, if you want to watch more hot stock picks from us, check out our US-China trade deal, 10 ASX stocks to buy video.